Greetings and welcome along to the podcast today. We're delving into cryptocurrencies. We were going to call this the New Zealand Crypto Roundtable, but maybe the crypto rectangular table. Got some great guests today. Now, this is a sort of joint episode between the New Zealand Tech Podcast, which I host, and the New Zealand Everyday Investor, which Darcy hosts. So we might just do a quick go round of who's at the table. Starting with you, Darcy.
Sweet. My name is Darcy Ungaro. I am the host of the NZ Everyday Investor, I guess sister or brother or cousin podcast to the New Zealand Tech Podcast. I don't know. Sure, we'll go for that. And I am an authorized financial advisor. I'll definitely point out I'm a crypto-friendly financial advisor, which I'm very proud to declare here today on public television, not quite. And by day, that's my job. By night, I just watch YouTube videos on cryptocurrency, right?
Oh, wow. Okay.
I'm just kidding.
My name is Brooke Howard-Smith. I'm the everyman here that got caught up a little bit in 2017, started to learn probably a little bit too late about lots of things, and then has spent the last 3 or 4 years really getting a deeper understanding about blockchain, the underlying technology, and really passionate about it now. But I'm certainly here as the every person asking the questions.
Cool.
Janine Grainger. I am the co-founder of Easy Crypto. So we're a cryptocurrency retailer here in New Zealand, and also expanded overseas from our home base here. Crypto is my day job, so here to talk to that, and also can bring a bit of the view of what the everyday people in New Zealand are doing, what trends we're seeing, opportunities, that sort of thing.
Cool.
Great. And I'm Paul Spain. I host the New Zealand Tech Podcast. And during the day when I'm not podcasting, I'm helping small to medium organisations to leverage technology well. And that really brings us to crypto. Now, Janine, since you run a business that sells Bitcoin and cryptocurrency, I thought you'd be the perfect go-to to maybe start us off with a sort of basic introduction to what is Bitcoin, and then we're going to sort of delve around a bit from there.
Sure. So yeah, at the most basic level, Bitcoin is a way to do payments or transfer of value that's fully digital. So what the Bitcoin network and blockchain is the other term you might hear, which is sort of the technology that underpins Bitcoin, made it possible to do payments between two people without needing an intermediary like a bank or credit card company, lawyer, that sort of thing. So in a nutshell, Bitcoin is payments made digital. But it's actually a lot more than that as well, and probably what we'll talk about today and touch on is a bit of how Bitcoin's sort of filling this function of a digital gold, an asset class, a portfolio diversification that you might want to dabble in. And there's also a whole range of other cryptocurrencies, thousands and thousands of them, that have sort of leapfrogged off the technology that Bitcoin started and do a whole bunch of other interesting things, some of which we might touch on today.
Cool.
Yeah, and there was a little comment there from Brooke at the beginning about timing for getting involved in this. Is everybody too late? Should they turn off the stream now if they haven't got involved?
I'm so sorry. See you guys later. Have a great day.
The number of times over the years that I've heard people say, "Oh, I should have gotten in," and but I'm too late. And yeah, I have some long-standing business partners who every time I talk to them, they're like, "Oh, so I should really get some, shouldn't I?" And I'm just like, it's never too late in my view. I think everyone in the world, in a couple of years' time, maybe 10 years, everyone in the world probably will own some cryptocurrencies. So these days, probably less than 5% of the world's population have some. So you're definitely very much an early adopter stage if you get in now.
And do you think that in New Zealand in particular, possibly a little bit late to the party here because we haven't quite seen the need for it, perhaps?
Yeah, absolutely. Like in some of the countries that we operate in, the penetration rate, the number of people in the general population that have cryptocurrency is around 20 or 30%. In New Zealand, I put it at less than 4%, just because, like you say, we don't have that need for it. We have a stable government. We can trust our banks, that sort of thing. Whereas in many other countries in the world, you don't have those luxuries.
Right. Interesting, eh? So, this Bitcoin thing is probably the gateway drug, really, to a whole universe of stuff. And depending on how you're wired, you're going to go pretty deep in it, potentially. But you don't have to, do you? Like, you could actually just sign up to Easy Crypto, get a wallet sorted out, and just buy some Bitcoin. And that's it, right?
Yeah, and a lot of people say, I hear one of the reasons people don't get involved is like, I don't understand how it works. And one of the sort of analogies I like to draw there is that, hands up who here knows how the internet works? right? None of us, right? We're all kind of like
Paul totally knows how it all
probably,
works, right?
Yeah,
Yeah,
we probably all know to
but
varying degrees, right?
most people don't really understand the nuts and bolts of what makes the internet do its thing, but we all know how to use it and, you know, benefit from it every day. And it's similar with cryptocurrency and Bitcoin. You don't need to understand how it all works and the technical infrastructure to be able to benefit from it and use it. But like you say, Darcy, you might jump down that rabbit hole, start investigating, start spending your evenings watching YouTube videos and find yourself really hooked on it. Because a lot of people genuinely get hooked on how cool the technology and the potentials and opportunities are.
That was, for me, it completely changed my life. I've ended up now, I work in a building that's primarily 4 or 5 floors of blockchain
nerds.
Startup ecosystem, and it's great because it's at that cutting edge of technology. And so if this is the gateway that gets you into understanding how we're going to solve some of these really big problems with technology, then that's worthwhile. So outside of the investment side of it, I think it's just worthwhile to learn about something that was a really interesting idea that now has millions of people around the world involved in it.
Little bit by little, then all at once, right? And it seems like there's been waves of adoption, right? Like 2017, huge retail wave, euphoria comes crashing down, spooks everybody for a couple of years, then it's taken off again recently. Yeah. So there's obviously these kind of, it's not a linear sort of adoption and predictable. It's quite erratic and it's quite volatile, but like with anything new, right?
Yeah, but and it's interesting, that big surge in 2017 has funded so much research now. If you look at what they're doing at Centrality, so whether it's tourism or the food network, so every major food provider in the country now is involved in a blockchain trust alliance, it's a blockchain venture or payments. And so, we could go way down. That's a whole nother podcast. We'll go back to investing, but certainly if you want to get in behind the scenes and look at it, it's pretty fascinating stuff.
Now, Darcy, I want to come to you as an investment advisor. What was it that attracted you to
the space?
Yeah. Obviously, there's some impressive returns at times, so I'm sure that's part of it. Yeah. And if you can delve into this aspect of digital gold, a term that's often applied to Bitcoin.
So, 2017. Yeah, 2017, right in the middle of it is when I decided to get in. Way too late for the party. Kind of like, might feel really similar to right now, but it was because I was doing a podcast on Bitcoin. Before that, heard about it, discounted it, thought it was voodoo science. Stay away from it, because that's what you do by default when things are different. You stay away from it. But then as part of doing research to get ready for this podcast, I started to understand a little bit more of it. And Bitcoin's cool because you don't actually have to understand all of it. You just need to understand a little bit more. And there's always a little bit more that you can slowly get comfortable with. And when you do that, you can't turn back very easily, because once you've seen it, you can't unsee it. And once you've seen, right, there's this thing out there, which is digital, it's peer-to-peer, it can't be fiddled with, and it doesn't rely on third parties to do stuff with. Well, that actually sounds pretty intriguing. And it also sounds really similar to gold. And so a lot of people who are okay with the idea of having a very small amount of their portfolio devoted to these weird, funny investments like gold and silver and precious metals and now Bitcoin, it kind of makes sense. And it's not too much of a stretch for people who already get gold to say, hey, think about Bitcoin, because it really is, in a sense, like digital gold. It's scarce. Well, it's finite. Gold isn't technically finite, but it is absolutely finite, and it's freely available. You can transport it really easily, and you can be your own bank really easily with cryptocurrencies and Bitcoin. But with having a safe in your garden for storing your gold, that's a little bit trickier.
Yeah.
The be your own bank bit, I think, is something that would scare a few people.
Yeah. And it should.
Can we delve into that a little bit around
pros and cons, right?
Around how it works in terms of
this would be a really good question for Janine.
What are your options for storing your Bitcoin? Because it's you don't actually have something to hold on to, and in fact, there's very little to actually store other than you know.
Yeah, so for people who are very new to this and don't understand how it works, with cryptocurrency and Bitcoin, we'll use it as the best example, you don't hold Bitcoin, like there's no sort of physical thing or anything like that. What you have is a private key which gives you access to spend your Bitcoin. So you need to hold that digitally, or you can print it out on a piece of paper, but it's basically Yeah, it's a digital sort of token that allows you to access your crypto. And you need to hold it in a wallet, but the type of wallet that you want to use will have trade-offs between security on one hand, so really secure wallet, and ease of use on the other hand. So everything sort of falls in that continuum. You can have something really, really secure, but it's not very user-friendly, or it's not easy to get your money out, or you can have something very easy to get your money out, like say an app on your phone, but it's not so secure. So the advice that I typically give to customers is kind of to think about it like you would think about money, normal money, right? You put in your back pocket maybe $50, 100 if you're a high roller, maybe $1,000, but you don't put a lot of money in your back pocket because there is the chance you could lose your wallet. It's the same thing with an app on your phone. It's not the most secure, but put your day-to-day spending or what you want to be sort of like, accessing regularly there. And then for your life savings, your big pot of Bitcoin, whether it's, you've managed to save up a whole Bitcoin or whether you've put your entire, wealth into it, however much you've got, if it's more than you're willing to lose, you should look at using a more secure wallet option. And our recommendation is always hardware wallets for that because they're the most secure way to store your cryptocurrency.
And in that case, you've got to be a little bit careful, don't you? Because we've heard in the media recently around someone who's put theirs on a hardware wallet, but maybe didn't really think through how important that was, because maybe what was on there was a small amount at one point in time, and they seem to have mislaid their PIN number, which is a fairly grave mistake to make.
Which is interesting to. Here's something interesting that I wouldn't have known at the start of this, and some people won't realize this. So I lost a nano ledger that had a lot on it, but I still had my PIN. So you're able to recover if you so you can physically lose the cold storage device. You can lose, which is an amazing concept. And as long as you've got this in your head or you somewhere
or safe somewhere really secure. We should also talk, I guess, about, because what I've talked through is the options for being your own bank. And as Darcy said, that is the magic of cryptocurrency, is you have full 100% complete control over your finances. You're not dependent on the bank, the government, any third party to give you access to them. And like I mentioned before, in many countries that's a very real concern. But not everyone wants to be their own bank, and I think this is something that we're seeing more and more as crypto becomes more mainstream. Is, early adopters, that was the big selling point. You want to have your own funds under your own control, but as the rest of the population come along, a lot of people actually want someone else to have that control. That you want to know there's someone you can call up, someone can reset your password, that sort of thing. So if you aren't wanting to go down the route of being your own bank, there are still options. It's you're looking at something where someone else custody, that's the term that's used for it, custodies your crypto for you. So if you are going to go down that route, look for providers that are really reputable, that have insurance in place, that have contingencies, backups, have a really long track record, that sort of thing.
And it's not a foreign concept either. Like when you're even just KiwiSaver investors should be actually familiar with the concept that when you're putting money into your KiwiSaver scheme, you're not actually investing with Generator or Simplicity or whoever it is. You're investing in the funds, they're managing it, but the funds are actually sitting in a custodian, like public trust, for example. And that's quite a common way to do things, and it makes things very simple because you don't have responsibility of keeping your share certificates and all that sort of stuff up to date. So I guess for everyday investors that are kind of dipping their toes in the water with crypto, there is that trade-off, isn't there, between having the cold storage, a lot more procedures, a lot more risk with you fumbling your way through it and potentially losing your keys or losing access to it, but at least you're in control of it, and then relying on a third party to custody it for you. Probably a lot more easier to use. The user experience is better. Maybe there is an 0800 number.
Yeah.
But I guess there's no real right or wrong way here, is there?
No, although I would say, and I think we talked about this previously, Darcy, is that for everyone, like that bit of dipping your toe in, like even if you just put in $50, set up your own wallet, $50, if you mess it up and you lose it, not the end of the world, but at least you get to go through those steps and understand how it works, and you'll learn, just for the learning, I think that's really worthwhile. So I'd recommend everyone, if you want to get involved in crypto, at least try doing it yourself and setting up the wallet, doing that bit just for a little bit, dabble, see how it goes, and maybe that's not how you want to go, long term, but it's really worth learning the process.
I'd probably even go further than that and say, even if you don't think crypto is for you, that if you have any interest in investment or technology, which is really our whole audience here, then you should actually go through this process just to learn. And I'm really a big proponent, with new technologies of actually we should get out and try them, because otherwise how are we going to open our minds up to the possibilities? How can we think strategically? How do we take New Zealand forward if we're all sort of sitting back being super cautious, right? And it could be I don't, you probably start at $10 if you want to, but just try that process out so you understand
What else?
and have a little bit of a look around, learn. Obviously, listening to good content like this is another part of the picture. But we need to be absorbing this information and getting that feel. And look, some people will say, hey, this is not for me. But I understand. I've got a bit of an understanding.
Knowledge is power.
And very
At
important.
some point in time, and I think we're getting there now, people are realizing that this is not like something that's going to go away. And so you can make a choice now, and we've all got friends that chose to not be that involved in the internet, or not that involved, not that they chose to be not tech savvy, and it affects their lives negatively. There's no doubt that that'll affect your life negatively. So getting involved in the technology, getting a general understanding will no doubt put you in a decent position later.
Yeah, and that investigation helps you to then, if you do decide to get more involved, to make those smart decisions around where are you going to store your crypto, right? Because I think most Kiwis will have heard of Cryptopia, and there are varying other ones are stories around the world where people have lost money, and I guess you could I don't know, go back 100 or 200 years. Banks would get robbed, people would lose their savings. There's an element of of that sort of thing. But over time, mechanisms have come into play to make, I think, our money reasonably safe. Certainly here in New Zealand with most of our banks, although I don't think the government actually has that bank guarantee that they did have during the global financial crisis. So there really are no guarantees, right, as far as investing is concerned.
But we're talking about shifting the responsibility, right? Instead of relying on third parties to keep you safe, which may have worked for a season, and I'm going to speculate just quietly that season may at some stage come to an end, where we might need to consider trusting in something else other than institutions, because that's kind of what season we're in right now. I'm not saying that we should be cynical and stuff, but I think there is a case for, well, what if things do fail? And so Bitcoin as an investment is as much about understanding this new technology as it is about becoming some sort of hedge, or obtaining some sort of hedge against the status quo, in my opinion. And
as a hedge, it actually performs a lot of functions, right? You've got that hedge against centralization, against inflation, because Bitcoin is not an inflationary currency, because there'll only ever be 21 million Bitcoin in existence. And at the moment, we're seeing things like fiat currencies like the US dollar and the New Zealand dollar being printed by the government. So effectively that's causing inflation, making the values of those currencies go down. And that's something you don't see with cryptocurrency, or at least not with Bitcoin. And as well as a hedge against inflation, it also gives you a hedge against global financial crises potentially. Like, we do see that there's becoming less of a correlation between the price movement of Bitcoin and price movement in other asset classes. Right. So lots of different diversifications there that it can bring. That's
right. That whole diversification thing is quite key, right? Because I think that traditionally we diversify across different asset classes like cash, fixed interest, property, shares. We feel like we're diversified, and then when each of those categories we diversify again, but we're not really diversifying from the thing that's denominating those investments, right? We're still all trading in dollars somehow. So this Bitcoin is such a hedge upon a hedge. It's ridiculous, but it just makes sense, because you got to have a foot in both camps, but where is the other camp? It's not in shares in a different jurisdiction. It's in a different monetary system. You're like this, having you on the podcast is so awesome, because there are so many people out there right now that are going through potentially what we went through in 2017, and they get into the greed area. And they start to make. If I hadn't been married, my wife stopped me from selling the house. We just every day you would see these crazy gains, and then you're like, I'll sell the house tomorrow, put it in next week, and take it out 2 weeks later. Remember, there was a guy that sold his house, and the sense is that when we've talked in the past, that diversification and making sure that you're playing in the right kind of areas for your comfort. Because when it did go off a cliff, if you weren't prepared for that, it was a really unpleasant experience. Absolutely. And I think there's always this fine dance between diversification and concentration. Yes. And it's so specific on who the investor is, their attitude towards risk, their life cycle, all that sort of stuff, right? But you could say, well, maybe like a conversation I had right before Christmas with somebody, I am going to sell my rental property and put it all in Ethereum. Bold move. It was a bold move, and I thought, well, and I think Ethereum was half the price, less than half the price of what it is today. So, in hindsight, that would have been a good move, of course. But at the time, you have incomplete information. And so unless...
Did they do it?
They didn't do it. He's probably watching, so
That's good.
I got to be careful with what I say. But still, at some stage, you do have to kind of back yourself. But in other realms, you do need to be diversified and just be prepared. Like you say, worst case scenario, what happens if you lose your nano ledger and it's all gone, right? Like that would be...
And I guess it's not, you're talking about falling off a cliff, right? You don't want it to be that massive precipice. You want it to be a small enough jump that if you have to make it, you'll still survive.
Everyone I know that was totally comfortable to ride it out and hodl through this thing obviously is completely comfortable now. Most of it's recovered, some of it's passed. But anyone that had stretched, had leveraged themselves, obviously is telling a completely different story about how they sold their Ethereum at $230 and now it's at
$2,000.
Yeah.
They used a term there, hodl.
Yeah.
You better break that down for.
And
for
again,
our
I'm not
audience.
the expert. On a Reddit board at some point in time, some guy, and I don't know who it was, guy or girl said, "I'm hodling." They mistyped holding, and it's taken on. So HODL hodl is kind of a crypto talk for holding. So there are people out there that have a far better kind of tolerance for craziness than me. That they'll be trading this often incredibly volatile products, and then there are people who are just like, I believe that this thing, and you'll have better data than me, but year on year, decade on decade, now that we're getting into decades, these products perform better than a lot of things if you hold them, right?
Yeah. But if you go back to say 2017 just for a second, when the price went up. Let's say you did sell the house and you put all in Bitcoin, you had this tremendous gain, right? Or whatever that amount is, you had a tremendous gain because you got in at the right time and you've just witnessed an amazing return on your investment. How easy would it be to then say, should I get out? I've made a great gain here. Should I get out? And so I think we're almost at a different place this time around compared to last time, in that retail investors were perhaps not really aware of what would be coming next. Now we kind of almost have a reference point that, hey, back in 2017, things did fall off a cliff. And so when we've seen these gains, I think Bitcoin will pass from weak hands to strong hands more and more. But I think also there's the base of Bitcoin holder, which is a little bit more mature than what it was.
Yeah.
Would
And
you agree
also
with that?
a lot more institutional as well. Like one of the things that we're seeing that's very different this time around than compared to 2017 is who are the people who are buying and selling. And if you've been following the news, you will have seen big companies like MicroStrategy, PayPal. There's a lot of big corporate entities getting in, also a lot of private wealth managers. So instead of the market's not as frothy as it was previously because you've got a lot of big institutional corporate bets in the market as well.
Do you guys feel that, post the last hype, there were a lot of other people like Facebook that thought they would create their own currencies and failed, in that sense that potentially they're not as easy to replicate in terms of building momentum as people thought? Because that was one thought. People were like, well, someone's just going to create another Bitcoin or another Ethereum. But is that a sense that is much harder than people thought, and they're like, well, we'll just adopt these instead?
I think the longer time goes on, the less likely it is that Bitcoin will be replaced by anything else. So Bitcoin's not the best currency out there. And last time, in 2017, there was so much, Bitcoin's so slow and it's so energy inefficient and this, can't process transactions like Visa and MasterCard. That's not, what it has ended up being is, like you say, Darcy, that digital gold. The role it's filling in the ecosystem is a safe haven, a trusted brand. It's got that longevity. It's been around for, over a decade now and hasn't had any, there's been no hacks of the underlying system. The infrastructure itself is sound and trusted. So I think it's very unlikely that anything else now will take the pace of Bitcoin because it has all of that legitimacy behind it. But then you sort of start moving off Bitcoin into the other altcoins, and that's where it really is, survival of the fittest / potentially survival of the most heavily branded, because it's not always the best product that wins, right? It's the one that gets out into the market and makes the biggest waves.
And are those now, is it all about function for those? So if you're saying you've got digital gold and Bitcoin, with the altcoins, are you looking for something that has genuine functionality? You've read the white paper, someone knows that they've got good partnerships with existing brands?
It's like investing in startups almost, isn't it?
Yeah,
Seems to be a bit of a balance, doesn't it, between that aspect and also how useful is it?
Yeah.
And how long has it been around? Those two sort of, play together, don't they?
Yeah, and you've got a few tiers, and perhaps, Darcy, it'd be good to get your view on sort of how you would, talking about the diversification. You diversify your portfolio into cryptocurrencies, but also diversify within that. So good to get your views on that. But as the way I see it is sort of you've got kind of tiers of cryptocurrencies. You've got your very established players like Bitcoin, Ethereum. I will put Ripple in there, don't shoot me, but it's, for reasons, it's very long running, established, has a lot of credibility and a lot of uptake already. And then you sort of move into your next tier of cryptocurrencies, which have more, they've been around for a while, they have use cases, they might have real world applications, but they're just not as mainstreamed. And then you've got the sort of bottom tier of all of these, like, call them penny stocks, IPOs, there's a lot of interesting projects. Some of them might be the next big thing, and maybe you can buy them for cents on the dollar now, but it's a real gamble, and it very much depends on how good is the underlying product, how well does the team work. Because a lot of these things are startups started by, maybe half a dozen young people that are like, had this idea and, will they get the backing to make it work? Will they get the market adoption? That sort of thing. So very speculative in that bottom layer, but very much a pyramid. A few on the top that are very legitimate, and then sort of it goes down to...
Try not to say the word pyramid is the key.
It's not a pyramid, it's a matrix.
It's a matrix, there we go. But I think
the pyramid schemes are calling
matrix.
themselves matrix now.
Oh, is that
really?
right?
Lion shares, it's not a pyramid, it's a matrix.
Nice. Let's come back to that as well. But on that theme of diversification, like let's just talk about like traditional investment. If you were constructing your own portfolio, you would probably have either a core satellite approach is a good way of looking at it, or think about the majority of your wealth is tied up in a strategy, and then you'd have smaller little amounts allocated towards different things. With cryptocurrencies, I think you can kind of almost apply the same sort of template on how you view holding Bitcoin, and without being too prescriptive. So I don't want to be too prescriptive, because then someone listens to this and then they go out and do it. But at the same time...
This is financial advice.
Yeah, that's right. But at the same time, it's useless to make an example without giving an example. So I'm just going to say, right, well, if it was me and if I was in my mid-40s, if I was, I would probably be inclined myself to have, say, 80% in Bitcoin, right? And for me personally, I'm a big fan of
80% of your entire investment in cryptocurrencies.
Thanks for clarifying that.
Yeah,
Thank you.
Yeah.
Which is a small percentage of your total investment.
Sorry.
Do not put 80%
Yeah,
of your total
no, sorry. I should rewind that one. Right, traditional investing, you might have is the majority in your core, and then one of your satellites might be cryptocurrency, right? So within that little satellite, 80% of that would be Bitcoin in my world, right? And I would store that in cold storage. I wouldn't have that on an exchange or anything like that.
And for Kiwis, a lot of that sort of core investment is going to be in their own homes and
property, KiwiSaver, simple, right? So within your portfolio of crypto assets, Bitcoin majority, let's say 80%, for example, 15% maybe Ethereum. I kind of think of it still as silver. I know it's not technically silver, but it's kind of, in my mind, it feels like silver and gold, right? And then you have these other precious metals like palladium and copper and stuff like that, let's say. That'll be your altcoins, maybe only 5%. So 80, 15, 5%. And those 5%, really that's where you're trying to back the winners, like you say, and you're trying to figure it out. That's quite engaging. Ethereum, I think there's a lot of use case around that. So that, to me, that makes sense from what I understand so far. Bitcoin, digital gold, right? And it's not like you're holding these assets, or you have to hold these assets and they just sit there. There are some platforms where you can actually give over your keys. You're holding it on their platform and you're earning interest on it. So it's not true that Bitcoin just sits there and does nothing. It can actually generate a return now. There's other platforms like Celsius that do that quite well. So that's kind of how I would approach it. Now, if you were really young and you didn't have any alternative assets like crypto assets, the mainstream thinking is, hey, you want to get down your debt first. You want to buy your home, get rid of the debt, and then do these high-risk assets. I would challenge that a little bit, because it doesn't give you enough runway. Most people will be in debt on their mortgage for almost ever, right, until they retire. That's not good enough to wait for 30 years to get into crypto. I think as soon as you can, there should be some allocation towards crypto, at least Bitcoin, just to start with, because it is high risk, it is volatile, therefore it needs more time to bear fruit. So that's just kind of...
So how would somebody do that? And I think we've probably got a reasonably easy answer here at the table.
There'll be a clue.
But when I first took an interest in crypto and Bitcoin, it was complicated to be able to buy it here in New Zealand, and I don't, there was probably a number of different points over time. I'll go and buy some, and then I looked online. It was like, and sure, I could have gone through my network and found somebody and figured it out. Oh yeah, I'll send you some Bitcoin, give me some cash. And,
it's like buying cannabis. It's exactly like buying cannabis. Apparently,
so there was that point in time where it was really, really hard. And I didn't jump on board until there was a service called My Bitcoin Saver, rebranded to Vimba, which is sadly gone. But you can now do a very similar thing with Easy Crypto. I believe I haven't tried this aspect yet, but where you could put aside, whatever amount, your $20 a week or $100 a month, or however you decide to sort of do it, that allows you to sort of start building something or whatever.
Is that right? So you guys are doing...
We do dollar cost averaging so this is a really powerful investment strategy, and one that you've probably maybe come across in other traditional finance markets as well. But the idea of, instead of trying to buy the dips and that sort of thing, is just to average it out, and over time it works out. Typically that dollar cost averaging, as it's called, is a really good strategy. So with Easy Crypto you can do that very easily, and like Darcy said, you could set up a portfolio of, you set up your diversification strategy and you could dollar cost average into that. So say you want to have 80% Bitcoin, 15% Ethereum, 5% something else, set up a auto buy with those ratios, and then every week maybe you want to send us $100, maybe every month, or maybe $200, whatever you want, and we will, you can use Easy Crypto to automatically buy into your personalized portfolio, and do it on dollar cost. Just set up an auto payment, forget about it, and you'll have your crypto kind of just chipping away and growing over time.
You find Suzanne Paul, because I'm sold. You're telling me that, no, that's great. I actually, a person, I won't say who, but the person I respect very much.
Suzanne Paul.
Yeah,
I thought so.
You guessed it. Told me about dollar cost averaging recently. It makes so much more sense, because you're dead set right. Most people out there are like, am I too late? Am I too early? What am I doing? But
you think, you're like, I should get in this thing. I do this all the time. Someone tells me about coin, I'm like, I need to get into that. And then by the time I get around to doing it, it's already like gone 3x. I'm like, So just like, set and forget.
And look, some people have the time to be able to follow the highs and lows and so on, but I think for the average, or for anyone that doesn't, the everyday investor.
You're struggling to use that word. Why, Paul?
We just did one information. Roll straight into the next one.
Oh no!
Brooke's next.
So for the NZ Tech podcast listeners and the NZ Everyday Investors, who aren't wanting to sort of delve in deep and day trade and so on,
don't day trade, kids.
and be watching for those highs and lows. And look, over a period of time, I mean, most of us have money coming in on a regular basis, and that's your easiest way of investing, as we see with KiwiSaver. Slice a little bit of it off and push it in that direction. If this is something
I
that you want to be involved in.
99% agree with you. The 1% I disagree though is if there's a scratch that you're not itching, and try and stay on the topic of finance here. If you're not actually doing what's inside of you to a certain extent in terms of trading or interacting at that higher intellectual level with finance, it might come out somewhere else. And what I mean by that is I'm a big fan of people having a very small amount in a platform. Maybe it's your Sharesies or your Hatch account, right? And you do trade, right? Just a very small amount, because what it does is it gives you a knowledge base that you're not going to get elsewhere. You're going to get really close to it, I think. So there's some value.
I use my MetaMask for that, actually, because every now and then I'll hear of a project, I'm like, that sounds cool. I'll just go to my MetaMask and be like, swap a little bit of this for a little bit of that. And
I guess there's also that aspect of getting started where you might decide, and I know Darcy, and in the past you've said, well, if you're looking at how you might sort of slice up your investments, then hey, maybe you'd put 5% into crypto. Well, if you've got nothing in, then you've got to get to that point. So you might take a somewhat different approach, so you can get started and get up to that point.
On the warning about the trading, this isn't a market where you have all the information. That's the first thing. Is this market is full of players that have significant weight to throw around, and they do so. They're unregulated, so they are able to pump and dump and do things that are potentially not legal in other markets, and so you don't have those protections. So anyone that thinks that they can outsmart someone that owns, a significant supply, then you're probably wrong. A much better, like a methodology, I would way prefer this dollar cost averaging sounds like such a great way to kind of avoid. But I'm a lot older. Someone crazy that's like, woo, I want to.
Someone in their low 40s. Right, different
ride
story.
the lightning.
Yeah.
Again, it's just hard to explain how crazy it is when the volatility really does hit.
But it teaches you a lot about investing in mainstream markets as well.
Oh yeah,
because of that volatility.
Yeah, that's
like
right.
When you see, or I've just put in $300 into Bitcoin, now it's worth $500, or now it's worth $100. That teaches you a lot about how you react. Sure. When you're investing directly in shares.
So school teachers, let's get kids investing. That's how I was making a joke.
Why not?
But with that though, I mean, I think like you say, it's a great way to learn. It's a great way to understand the market, your own risk appetite, things like that. And I think we'd all probably agree that as long as you just don't put in more than you're willing to lose, then
in that space, totally.
Yeah, very much so. So this, absolutely.
That's probably quite a good point to end on, actually. Don't put in more than you're willing to lose. We want to do a little wrap up.
Well, don't put in more than you're willing to part with for a period of time, right? Because usually with higher risk assets, it takes a lot longer for them to pay off.
That's
great.
You mostly only lose when you are forced to make a decision because you overextended yourself. Cool. So if you can ride it out, absolutely.
Yeah. And crypto investment, we talked about the HODL term earlier. Generally that's going to play out well when you're able to be in for a long time, isn't it? Yeah, we don't know, right? That's like the internet back in the day. It looked pretty cool, but I'm trying to remember what it was like back then. But
GeoCities homepages, everything was like pink and blue and like really bad text.
Right.
No, in terms of closing remarks, I just would want to chuck one in just around scams, because this is unfortunately something that I see too much of, is people getting caught up in scams.
Are you telling me Mike Hosking hasn't discovered the way that I can make more money?
The one true secret to trading? Yeah, I know, right? What a surprise. Why is he still working the breakfast show with all these millions? Anyway, the one thing that I sort of say to people is like, look, a good investment won't come knocking on your door. So if you have someone call you up with an investment opportunity, or a mate tries to rope you into some multi-level marketing scheme, or even if you see like one of those ads online, it's probably going to be a scam. So keep your wits about you, do your own research on everything. Where possible, use regulated, reputable providers. Unfortunately, as Brooke mentioned, there's a lot of places in crypto that aren't regulated, but there are, places like Easy Crypto, we are regulated. You'll find a lot of the big exchanges and stuff like that are as well. Yeah. So definitely do your own research. And if you're not sure about things, like reach out, ask advice from people who do, know stuff. Ask in the Facebook communities. Come and talk to us. We're always happy.
And you're good. I've come back. I've come to you guys with a couple of things that I've heard from clients saying, "Hey, is this a scam?" And you respond right away, which is
we like my main mission is just to make sure Kiwis don't lose their money, and that everyone in New Zealand gets financially better off through crypto, not worse off. So always happy to help and give some free advice on stuff like that.
Awesome.
Good work, guys.
Anything else to add? No.
Flowers.
I'd like to comment on Brooke's hair though again.
Thanks, guys.
I can totally trust.
And the beard. I love it.
Thanks, guys. Thanks, guys. That's why I like to wrap up all my podcasts.
Sorry for those who are listening on the podcast and not watching, so I miss out on those little extras from Brooke.
Well, thanks everybody for joining us, and we are going to delve more into these topics, and it's certainly not as though these are new discussions across the podcast, but really at the moment there's really a heightened level of interest, and I think that helps sort of get a bit of momentum and bring people on board to research and look at these things for themselves. Again, there hasn't been so much noise over the last couple of years, but thank you very much, Janine Grainger, much appreciated. Brooke Howard-Smith, thank you for joining us,
Captain.
And Darcy Ungaro, thank you
very much. You remember my name, and thank you, Paul, as well.
All right, well that's us. You can find these episodes online at nztechpodcast.com and at nzeverydayinvestor.com.
Sweet ass.
All right, thanks everyone. See ya.